Stock market continued its bull run Thursday.
It was a time where we had the biggest bull market.
2025.
Everyone's a winner in a bull market.
Robes love a bull market.
Bull market, bear market, you name the market, I'm there.
And 2024 has come to a close, stocks ending near record highs. It's been a fantastic year, guys. Over the last 12 months, the Nasdaq 100 has returned 28.6%, the S&P 500 about 23%, and the Dow Jones a modest 13%. Fantastic year. And despite the declines in recent weeks, investors have found reasons to be optimistic about the future because the Fed is officially in a cutting cycle. We are in a cutting cycle. That's really good news. We have a very business-friendly administration with Donald Trump and his goons in the White House. Earnings growth accelerated, and the market rally actually started to broaden out. And despite a brief growth scare here in the middle of the year, which did see the markets pull back quite significantly, stocks shrugged that off, and the US economy is ending the year in very solid footing. And we're going to talk about the US economy and 10 charts that summed up the year in this video. But first, let's talk about the biggest winners of 2024, and it was Palantir, Vistra, and Nvidia, all returning in excess of 150%. But the most impressive thing, in my opinion, on this chart is actually GE Vernova. They were spun out around April from GE, General Electric, and they returned 133% in that time period. Absolutely insane, considered the time-weighted return would have been super high. United Airlines up 135%, and actually such a great year across the market, including for my portfolio. My portfolio returned 46.54%. Now, this is just my equity portfolio, guys, which just consists of these stocks. I also have a separate ETF portfolio that was up about 26% this year. It's mostly just large cap quality, mid cap quality, small cap quality ETFs with some income and dividend ETFs, but it's a largely small part of my portfolio, relatively speaking, to my individual holding, which consists of only 5 stocks, the biggest being the Meta Platforms. Then in second place is Visa, then PayPal, Pexa Group right here, and then Evolution. Now, Pexa and Evolution are my 2 newest holdings, and they make up a very small component of my portfolio. We have PayPal, which is just 9%, and then Visa and Meta make up nearly 80% of the entire portfolio. More actually, 85% or somewhere along those lines. Now, Evolution and Pexa, very new. I like both these stocks. We should see great return potential from those. And also, I did have another name in here, Paycom Holdings, but I got stopped out of it just a couple of weeks ago. I ran a very tight stop, and I actually gained 56% on that position. All in all, I like having a concentrated portfolio because I do diversify into ETFs. And I do think this is going to outperform for the rest of 2025. If you disagree with me, go ahead and leave it in the comments and let me know what you think of my portfolio. But let's actually get back to the 10 charts that summed up the year in 2024. And it was a record-setting year on Wall Street, with the S&P 500 clenching 57 record highs to fall in the top 5 years for most all-time years recorded by a benchmark index. And 2 years into this bull market, strategists pinned the rally on strong corporate earnings and outsized momentum from the Magnificent Seven. However, earnings is set to broaden out in the future. Earnings is set to broaden out in 2025. In fact, earnings picked up across sectors in 2024, with growth finally expanding beyond the Magnificent Seven names to the other 493, with S&P 500 expected earnings growth over 15% here in 2025, and we're looking to print about 9.6% for 2024. We officially kick off Q4 earnings season next week. Now, the weight of evidence suggests the primary market trend remains higher, driven by earnings growth in 2025, guys. And you don't want to fight the trend or the Magnificent Seven, because while a broadening out of the stock market rally was a theme for parts of the year, the Magnificent Seven still posted another banger year. Nvidia rallied more than 175%. Meanwhile, Alphabet, Amazon, Tesla, and Meta all rose 30% or more and outpaced both the Nasdaq Composite and the S&P 500. Just leaves the benchmark index continuously concentrated in just a few large names. And as of December, the 10 largest stocks in the S&P 500 accounted for 39.9% of the index market cap, the largest share seen in the last 30 years. Could be a bad thing, could be a good thing. Either way, this is where we're at right now. and we just have to play the cards as they're dealt. Now, we also had a crazy election this year, something that somewhat got swept under the rug compared to just how much volatility we've seen in the last couple of weeks. And in the midst of what was a banner year for stocks, we actually had a history-setting presidential election. Donald Trump defeated Kamala Harris in what became one of the most unique races in recent memory after the current commander-in-chief Joe Biden dropped out. He was nowhere to be seen. There was actually multiple assassination attempts on Donald Trump. He had a criminal indictment, and the market reacted in tandem. It was absolutely crazy. Now, immediately following Trump's win, small caps, the Russell 2000 absolutely surged. You can see right here, we also had a surge in energy, a surge in financials, as well as a surge in yields. And the reason why we saw such a huge bump in stocks is because Trump came out and promised deregulation, lower taxes, as well as tariffs, which Trump has consistently teased, which has also pushed the dollar higher, a benefit for small cap companies, which tend to be more leveraged to the domestic economy compared to more internationally orientated large cap stocks. But tariffs are also expected to lead to sticky inflation and keep interest rates higher over the longer term. That possibility has boosted the long-term treasury yields, with the 10-year note trading at around 4.6%, a 7-month high. Meanwhile, sectors like energy and financials also jumped in the aftermath of Trump's victory due to expectation of more M&A and a steeper yield curve and less regulation. Similar to small caps, though, gains within these sectors were mostly short-lived. However, it really goes to show the underlying sentiment of the business-friendly administration coming into power in mid-January. Now, Bitcoin has been the exception. The largest cryptocurrency surged over 130% this year, and since the start of the year, this remains one of the biggest beneficiaries of the post-election rally. Trump's win pushed Bitcoin prices to all-time highs, with the administration viewed as generally friendly to the alternative asset class. Although the cryptocurrency has lost some momentum after exceeding 100,000 earlier this year, investors and analysts remain mostly bullish heading into 2025. In July, Trump attended a Bitcoin conference in Nashville and has since pledged to usher in more support of regulation for cryptocurrency as a whole. His promises including appointing a crypto presidential advisory council and firing current SEC chair Gary Gensler, who announced he would step down on January 20th. Now, the US economy has remained resilient for most of 2024. Retail sales once again topped estimates expectations. For the month of November, GDP remains strong and above trend. The employment rate continues to hover at around 4%, and despite its bumpy path down to 2%, inflation has actually moderated when you look at it right here. The positive backdrop means investors have grown increasingly confident the US economy will achieve a soft landing in which prices stabilize and unemployment remains low. But the election of Donald Trump has complicated the outlook somewhat. The risks are certainly tilted in the direction of high inflation, and a lot of risks come from the possibility of certain policies being implemented, specifically tariffs. Donald Trump has proposed policies such as high tariffs on import goods, tax cuts for corporations, and curbs on immigration, which are considered possibly inflationary by economists. On top of those fears, inflation continues to be sticky, pressured by recent hotter-than-expected readings on monthly core prices, which strip out volatile food and energy. In November, the core PCE and CPI figures, both closely tracked by the Fed, rose 2.8% and 3.3% respectively over the year prior, according to an updated economic forecast from the Fed's Summary of Economic Projections. Current bank leaders see core inflation hitting 2.5% next year, which is higher than September's projection of 2.2%. And all in all, with a Trump victory, the inflation outlook does get a little bit more mixed. However, the economy remains on strong footing. The unemployment rate, yes, it did increase. We're still at around the 4% level, which is regarded as full employment. We hit the highest level at 4.3% in July. That coincided with that growth scare that we actually got early in the year. Equities did pull back. However, the labor market continues to be on robust footing. And what will continue to support the labor market in 2025 is that the Fed is in an easing cycle. It lowered interest rates by 25 basis points this month to 4.25 to 4.5% in its final meeting of the year, and it signaled it would slow down the pace of its cuts after slashing interest rates 100 basis points this year. Fed officials see the Fed funds rate falling to 3.9% in 2025. That's higher than the September projection of 3.4%. However, that's on the back of a stronger backdrop. And despite everything we've seen with the unemployment rate and the hawkish pause, strategists are still bullish into 2025, with targets ranging from 6,600 to 7,100. Of the 17 strategists with the S&P 500 targets for the end of 2025, just one sees the benchmark index ending the year lower, with a high water mark of 7,100 by Oppenheimer. The median target sits at 6,600, reflecting roughly an 11% increase from its current prices. When detailing a case for the S&P 500 to end 2025 at 7,007, Wells Fargo equity strategist Christopher Harvey wrote he initially wanted to lean contrarian given concerns about bullish market sentiment, lofty valuations, and already solid economic growth, but Harvey wrote the data did not support a weak or negative year for the S&P 500, offering similar sentiment to how many of Wall Street feel about 2025, barring an unexpected shock. 2025, guys, will likely be a solid to strong year for the S&P 500, especially if things go according to plan. But if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit that notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.